Hello, this is Dave, and welcome to Equities Story. I'm with the Wolf, and obviously just a general share advice and not personal advice. Wolfie, a very quiet day. We didn't have too much news out today. A little bit sort of, I don't know, end of the week. Everyone's sort of heading to the pub already, aren't they?
It's the calm before the storm day for me. The reporting season is upon us. The first week of the reporting season is normally just like nervousness for me, and then we'll get it next week.
And Wolf, tonight, I suppose we've got those job numbers coming out in America, which the market's now. The reason the market is looking at these very, very closely, I think recently you've seen the Biden government very excited with the job numbers. That's actually quite good, right? But a lot of people believe when you get those job numbers, they're a lagging indicator, right? So with the economy slowing down, what they reckon has happened, and this is some people believe, is that a lot of companies have maybe how do you say, sort of, it's expensive to lay off staff. It costs a lot of money and a lot of time. So the reason what they say is that companies can have 2 or 3 bad months, or they can see the economy slowing down. They don't start laying off people immediately. So they start realizing, hold on a second, these sales numbers are pretty bad. Our margins are getting squeezed. We're going to have to do something here. We're going to have to start cutting staff. So job numbers are a lagging indicator, and the market's going to be watching it very, very closely tonight, Wolf. So it's going to be interesting to see what happens there.
Yeah, and I think, look, just to add to that, and you're absolutely right with what you just said. It's going to be natural attrition, and I know you're so relieved that I agree with you.
Yeah.
But also, I mean, you can hear the commentary from the big companies saying that they've just basically slowed down their hiring, right? I mean, that's probably going to be the key. What's happening over the last probably little period, where it's just caution out there from the bigger companies. They're not hiring. We've seen some of the bigger companies out there saying, yeah, we would definitely slow down the hiring. So we'll see what happens. But you're right. I mean, it is a late indicator, lagging indicator, should I say? And you'll probably see those numbers start to look a little bit more wobbly over the next probably 2 or 3 months.
And we've got 2 quarters of obviously negative GDP. The market's expecting a 3rd quarter and a 4th quarter.
Yeah, well, look, let's see what happens. The funny thing we talked about it.
When do the Biden government start saying, yeah, that is a recession?
Well, it's not up to the Biden government. It's actually there is some agency that calls it a recession, non-recession. I don't even know who it is, to be honest. But
it's all I've got a whole list of all the people in government under Biden telling us changing the laws on recession, Wolf. So it's interesting. So we'll see what happens. Maybe,
David, just like a good CEO, you spin the positives.
Yeah, I know, but no one spins it better than these guys, I tell you.
There's plenty of good spinners out there.
I'm trying to imagine if Trump if this had come from Donald Trump, like 2 quarters of negative GDP growth doesn't mean recession. Yeah, the press would have absolutely killed him. Biden says it. No.
Yeah, because it's just less controversial. That's all.
Mate, we just live
the media is like asleep pretty much at the wheel at the moment.
Mate, there is no media anymore. It's just paid people told to say whatever they want us to say. So anyway, enough of that, Wolf. Let's have a look at some stocks. AMS announcement out today. Yep. New CEO. Do you like him?
Yeah, I do. From the fact is that he's coming internally, internal appointment. He's been there for some time, and he's been product development, so he knows the stuff. So I think it's a very good appointment, and he's been an interim CEO anyway for the last little period. Yeah, I'm liking it, Dave. I think this is a positive catalyst. So potentially, maybe we could see that 40-45 cents in the near term.
All right. It's a recovery story, and if you look at that daily, it's starting to recover a little bit. So fingers crossed. SQ2,
yes,
didn't look too bad yesterday. Starting to break up. Put an announcement out last night. Not as good as one was hoping.
No, it wasn't. It missed expectations for the brokers out there. I'm just looking at it. It's actually down 7% after market. However, Jack Dorsey, the CEO, because there's talk that the top line, the revenue line is slowing down, right? But when you look at the company, that's got a lot of moving parts on that revenue line. So, from payment systems to Bitcoin transaction, all those sort of things. And the Bitcoin transaction was actually the one that's been lagging behind and looked pretty bad, right? But, Jack Dorsey comes back and says, guys, stop, looking at Bitcoin. Is that the fact is it's just a small part of our bigger view, bigger machine. So basically just said, get a grip, everyone. The business is going quite well.
That's good. You can say that if you're Jack Dorsey, can't you?
Yeah, it's true. It's true. But, Dave, I think knee-jerk reaction, still the company's delivered fairly well. Really difficult market, you got to say. So it might be a bit of a short-term weakness. So if you're in it for a trade, have a stop loss. But generally speaking, I'd be still probably thinking that this could have a recovery over the next 2 or 3 months if, in general, NASDAQ continues with this recovery.
Thanks, Wolf. CXO.
Yep.
Good looking chart and breaking up. And then they've got a new, CXO's got a new...
CEO too. And applauded by the market, ex-Rio, Dave. So, anything that's, I suppose, has got the name Rio BHP attached to it as management, I think the investment fraternity looks at it as a very positive thing. And let's see what he can do. So, from a smaller company to get someone of ex-management from Rio, hopefully that's a positive thing. Let's see. I mean, like I said, I don't think we can judge it right now. We got to wait for the next 12 months to see how they execute.
All right, Wolf. Really very quiet today. I thought we'd just have a look at some of the Einstein stuff. Really, I mean, I don't think there's anything. Everything actually, out of all the stocks, 99% actually have held up really well. I think having a look at these Einstein stocks, there's only one really weak was at ARU, which decided to do a capital raise. So thank you, ARU.
Yeah.
I think the only thing to do is really hold it.
Let's just have a look what price they've did it for. Hang on, just let me have a quick look. They've done a capital raise and placement of 41 million, right, which is substantial. And they did it at 26.5 cents.
Right, that's actually quite a good raise for that sort of money, isn't it? I think you sort of hold it and just sort of play it week by week, and we'll see where the chart goes. Wolf.
Yep.
No, so yeah, generally speaking, I think they've all held up really well. They've held up near the top part of that candle. There's a few. I think the biggest theme is in this market. Just don't be greedy. If you got the things like TPG, CNUs, these sort of stuff, right?
Especially at the end of the week, right? You've got a nice profit, possibly technically take it and start again next week with new stocks, or the same story that you still like, you go again.
Yeah, they're not all up, but I think sort of 60-70% up. But I think, the theme is just don't be greedy, right?
Agree.
If you got 2 or 3, 4% in this market, just take it.
Because you never know what's going to happen on the weekend. China could, like you said at the beginning, China could accidentally put a missile in Taiwan, and there you go. There's a World War III happening over the weekend. So that's why I think in this market, you still want to be cautious. You still want to take your profits probably at the end of the week if you see them quite nicely, and you start again for next week.
Yeah, especially these little stories like NTI, had a good move, a little resistance at 10. I mean, I still like it. I like this LAU that hasn't really done too much, but you still got to love that price action. It's held up to the top of the candle. Even Ash. Yeah, have a look. How far has it moved from the trend line? Just don't be greedy with them. RDY. Like I said, maybe near it gets to 350. Just be happy with this. I remember years ago when you were trading Einsteins, you absolutely killed it that year, and you just weren't greedy. You're happy with your 2 or 3% every week, weren't you?
Yeah. Look, there's a number of ways to skin a cat, right? Investing in the market. So you can just take the slow approach, little bits and pieces here and there. You can, follow obviously CTMs, and if the chart says it's enough, you move on. this is just the different ways of doing it, depending on what sort of investor you are. You know, you can be a long-term investor and you look at the longer-term charts. Dave, there's a number of ways you can play this.
Yeah, I'm just having a look. I mean, generally speaking, you know, they've really, some of them have been quite good. Some of them are just holding up more or less where they are.
Yep.
I think, yeah, general theme is, Wolf, just don't be greedy with them. If you've got a nice little percent, take it and see what the market does tonight, because the Dow could have a rocky night tonight, and then see what looks good. See what looks good on Monday morning.
Yep.
On that note, Wolf, that's all I've got to talk about, really.
Well, let me help you, because obviously you've you know, normally we can't chat you up, but you've done pretty well, very quick today. So I'm just quickly going to go through the FN arena. There's three stocks I just want to quickly mention, right? Because there was some nice, interesting updates from the brokers out there. So let's start with Iluka, please. Can you put that chart on? And what they're saying here, there's two brokers out there. One City has it as a buy at a price target of 11.25, which is nice. But then Macquarie, their outlier, Dave, outperformed with a 14.50 price target. That's a bit out there. Obviously, they're a believer in mineral sands, but also it's rare earth. So I tell you what, I mean, I've still, you know, one of my preferred choices in this space. So there you go. Not bad.
Well, we'll get excited as soon as it gets over trend, Wolf. We'll be in it.
All right. So the other one is NEC. So let's have a look at that one. We've got a update from Credit Suisse, just talking about that Nine provided an updated guidance and EBITDA to grow by 22%. So like we've been saying, you know, that possibly if there's a bit of a slowdown, people, you know, want to save some money because of the inflation and interest rates going up. They're going to probably cancel their subscriptions to the streaming services and go to the free tier TV. Nine network, SWM7 network are probably going to be okay in that space. So 22% is a nice growth day for FY22 for a company like NEC. So, and it looks cheap. So it's being on 11 times PE and a 6% yield. Thank you very much.
So what's in the sell-off today? What are the markets seeing in that?
I don't know. I don't know. But at the end of the day, it seems okay. It seems okay. I don't know. Maybe the market just wants more and more and more of these sort of things, you know. And then maybe the outlook, they're always going to be cautious about, you know, what is next coming up for NEC. Are they scared about advertising revenue? You know, there's always going to be a little bit moving parts. I think one thing that maybe is letting it down with NEC is DHG, right? They've got that pretty strong associated with HG because they've got a nice holding, big holding. And even though, you know, that's looking okay, but remember DHG with its own business in the real estate game, maybe there's a question mark there. I mean, you can maybe ask a question on a few different bits and pieces of NEC, but I think generally speaking, when you look at 12 times, or sorry, 11 times, like I said, 6% yield, if it's trending within a certain trend line, I'm happy.
Right.
All right, let's go to, so we talked about Centuria, didn't we, yesterday? So again, the general feeling, there's 4 brokers that talked about Centuria, CIP, saying that the risk really is with the servicing of debts. It's going to get tougher, right? And possibly the valuations on real estate might also be a play. Last one, Dave, I just want to quickly mention VNT. And I know somebody asked us maybe 2 weeks ago about VNT, and we have a look at it. It wasn't pretty boring, but when you look at the numbers and you're looking at 14 times PE and a yield of 5.4 and a great looking chart, I wouldn't say no if you're looking for a dividend story at a cheap price.
Yeah, listen, it's not a small story by any means, is it? It's a
Yep.
$2.5 billion company.
Exactly. So, you know, this is why I like looking through that, because sometimes you're going to find a company in there that you go, it makes sense for an investor out there if they're looking for a bigger type company that pays a good dividend, that's cheap, maybe a little bit boring, but you know, it fulfills a lot of the criteria. There's one there for you right there.
Yeah, and it looks like they're winning contracts pretty regularly, Wolf.
Exactly.
So, yeah.
Exactly.
All right. Well, thank you very much for that update. Some interesting companies with some decent broker reports.
Mhm.
Yeah, I don't know. It don't feel like any sort of trends come
Good.
to light
Let's put
today.
it for Monday.
Wait till Monday. Hopefully there'll be some, and hopefully we get some decent numbers on those employment numbers tonight on the Dow Wolves to give us a bit of a boost for Monday.
Yeah. Now, remember, we're going to do the Ask the Analyst at 12 o'clock. So please join us there. We will talk about obviously all the stocks, plus maybe a couple of American ones, because we started looking at things like, and I'll give you a little, maybe a taster of things to come. We looked at Team, Dave. Let's just put that in. And we thought maybe if there's going to be some stories that we're going to be looking at, something like that, which is up 10% overnight on its earnings. So that's going to be over $250 come Monday, if that holds up, if that's true, that that's aftermarket play.
Really brilliant. On that note, thank you very much, Wolfie. Speak to you later.
See you in an hour, everyone.
Bye-bye.
Bye.